Awesome. There we go. Thanks a lot. I'm really happy to be here. Heard great things about the community. Obviously, Samil, who's on our team, is a member, and so I'm excited to chat. I'll start by maybe just doing a quick sort of intro on myself, the company, sort of origin story, for a few minutes, and then we can dive into actually building some financial models in Causal to give you guys a sense of how the product works, but also kind of understand some of the best practices that were mentioned, and then we'll leave probably like 10 or 15 minutes at the end for Q&A. If you do have questions during the workshop piece, just drop them in the chat. And hopefully, Samil, if you don't mind, just trying to like monitor that and just flagging in case I miss any of those. So great to meet you all. I'm Taimur. I'm one of the founders of Causal. What is Causal? Lots of different ways to think about the product, but essentially, I think probably the most useful explanation for you guys is that Causal is a financial modeling or financial planning tool for early and growth stage companies. We want to automate all of the sort of manual stuff that you might have to do on the financial modeling side of things, so that you can spend most of your time on the stuff that is kind of much more high leverage, that requires human judgment and expertise, etc. And so in Causal, you can connect to your historical data wherever it lives, probably from your accounting system, probably from your CRM, maybe data warehouse, HR system, etc. So you can pull that historical data. You can then build models and forecasts off of the back of that, including scenarios and all sorts of other things that we'll get into. And then you can present these in nice sort of interactive dashboards where your team, your investors, your heads of departments, etc., can really understand and play around with these models. And everything is live. You're not worrying about sort of sending an Excel file that someone might have that's out of date, or all of that kind of stuff. And so, yeah, we just want to really simplify that process. Zooming out a bit, actually, Causal is just a very general number crunching tool. Finance is the biggest use case today, but you can use Causal for pretty much anything involving doing calculations or visualizing data. And we have people using it for all sorts of things, even outside of finance. I think we've got a bunch of nonprofits using us to model the cost effectiveness of the work that they're doing in different countries. We've got sales teams using us. We've got people using us for personal finance. I think a couple of years ago, we had a guy that was modeling out the economics of some video game he was playing and trying to like figure out, okay, like how can I optimize my empire thing that I'm building in this video game? So, really a very general tool. But the biggest use case today and the use case that's most relevant for you guys is obviously the finance one. So that's sort of super high level on Causal. In terms of my own background, just quickly, I don't actually have a finance or sort of operations background in any particular sense. I studied maths at university, and so I'm coming much more from the tech side of things. But obviously over the last 4 years since starting Causal, oh, yeah, it's, over the last 4 years since starting Causal, we now work with hundreds of different startups and even kind of non-tech companies on the finance side. And so, seen a pretty big range of companies and how they do finance and the problems they run into, etc. So happy to answer any questions or chat about even stuff outside of specifically financial modeling in terms of like tech stack and best practices and what we've seen work when it comes to finance at lots of different companies. I'll stop there on the introduction side. In terms of a kind of workshop, I thought it'd be interesting to try and build out a few models together to give you guys a sense of the platform. And so we'll start by building a revenue model for kind of a SaaS company, and we'll basically do that from scratch. And then we can dive into building a headcount model, which is obviously kind of the biggest expense for most startups is payroll and salaries and so on. So modeling that out is really important. And I don't know if we'll have time for this, but we can then try and use one of our templates to basically build a 3-statement model. So balance sheet, cash flow, and P&L, which are all connected together. So I will now share my screen and we can dive in. All right, hopefully you guys can all see this. So I will say that, if you guys are interested in using Causal yourselves at your companies, probably the way you will start is using one of our wizards that basically connect to your accounting system or HR system and automatically spit out kind of a model that's kind of 80% of the way there, and then you can customize it from there. I think that's probably the quickest way to get started, just for the purposes today, so that you guys can understand a bit more behind the scenes of how the product works. I'm going to be building a model from scratch. And so let's create a new model. This can be our revenue model for our business. And so this is kind of the sort of blank canvas that Causal presents you with. Really a bit like a spreadsheet in terms of how flexible it is. Anything you can do in Excel, you can do in Causal. And so suppose we run a early stage SaaS company and we want to have a sense of, hey, how much revenue might we generate over the next few years? We might start by having a bunch of different assumptions about our business. And so we might think, okay, well, how many customers do I have today? And so what we can do is we can create a variable. We can give it a name, we say initial customers, and maybe we'll say 50. So maybe I have 50 customers today. And so everything in Causal has a name and a value. That value can be a number, it can be a formula. And so it's a little bit more structured than a spreadsheet, where obviously in a spreadsheet, any cell can, can be a number, it can be text, if you had buttons and things like this now. So we're a little bit more structured than a spreadsheet, and that lets us do stuff in a much nicer way, as we'll see in a sec. So we've got 50 customers today. Maybe we want to see the revenue per customer, and maybe this is $100 that we're getting per customer, and maybe we'll just assume that our customers will grow by a certain percentage each month, just kind of a growth rate. And so we can include that as well. And maybe we're not sure exactly what this is, but we think it's somewhere between 5 and 10%. In Causal, we can actually use these ranges. We can say, hey, this is going to be between 5 and 10%. Causal will treat this as a probability distribution, run a bunch of simulations to kind of show you the range of possible outcomes. You don't need to worry too much about what's going on behind the scenes, but we can basically take that for you. So we've got some hard-coded assumptions about our business here, and we're now ready to start actually building the model. So writing some formulas that take these assumptions and do some different calculations with them. And so what we can do is create a variable for our customers over time. And this is where we'll write our first formula. And so if we think about what we want to do here, each month we want to look at the number of customers in the previous month, and we want to increase that by the growth rate assumption that we've already created. And so we can write a formula to do this. In Causal, the formula is pretty much in plain English. And so we can reference the number of customers in the previous month. We could use this to reference any other points in time as well. And we want to multiply this by this sort of growth rate factor. And so this is what a formula looks like. You can look at this and see exactly what's going on. There's no cell references. And if we hit enter, we should see something interesting happen. So it looks like we still have zeros in all of the different months. The reason for that is because in January, which is the first month of our model is from January to December. In January, there is no customers in the previous month. And so we basically have to tell Causal, hey, just for January, let's not use this formula. Let's instead just use our initial customers. And so, like a spreadsheet, you can go into any of the cells and change the value or change the formula. And so we'll go into the cell for January, and we will change that to just be equal to our initial customers. And so now what we'll see is that Causal has done this calculation across all the different months of our model. And you'll see this kind of little range that's being produced based on this 5 to 10% range that we have as our assumption. So we've done our first calculation. We can continue to build out our model. Our revenue would probably just be our customers times the revenue per customer. And once we do something like this, maybe we'll just create an assumption for our profit margin. Suppose it's maybe we're a software business and it's maybe 80% or something. We can then calculate our profit again just by writing a very simple formula. And now we have a bunch of different calculations. If we look at the formulas in this model, there's like 4 formulas that are generating all of the different numbers across all 24 months of this model. And so the amount of complexity in Causal is typically a lot less than the equivalent in Excel or in Google Sheets. So this is kind of the most basic model you can imagine. Once we have this, we're probably interested in visualizing this in different ways. Maybe we want to see our customers on a bar chart, we can do that in a couple of clicks. Maybe we want to see our revenue on a chart, and maybe we want to see all of these things in a table. So very easy to create these kinds of outputs. If we go into the dashboard mode, we can customize the arrangement of these and so on. We can change the granularity of these different things. We can, if you want to see it on a quarterly basis, if you want to add comparison columns, Causal takes care of that for you. And so once you're happy with the model that you've built, you can open up this kind of dashboard presentation view. And this is what you would typically be sharing with other people, whether that's people internally or externally. And anyone looking at this can see the different assumptions or inputs of your model, and they can play around with these numbers to see what happens in different situations. But the changes that they make won't actually be saved into the model unless they have the right permissions. And so if someone wants to see, hey, what happens if the growth rate is a little bit higher, they can do that. Everything updates in real time. But those changes, there's no way for them to break your model in this process. And so this is kind of the most basic kind of model and dashboard that you might want to create in Causal. Let's now think about taking this to the next level and adding a bit more detail. So right now we're just assuming that we have one product that and we charge $100 per customer for this product. In most businesses, SaaS businesses especially, we probably have a few different products, different pricing plans. They will, they'll probably be targeting different customer segments that will probably grow at a different rate. They'll probably have lots of different assumptions for each of these products. And one of the challenges of doing this kind of stuff in spreadsheets is that there's a lot of duplication that comes in if you need to do something like, have multiple products or multiple countries and so on. If we had 3 products in Excel, we would need 3 copies of every formula downstream in order to accommodate for that. If we're then adding a 4th product, we'd probably have to spend an afternoon restructuring the whole spreadsheet, adding rows in the right places, et cetera, et cetera. And so Causal can try and help with that, and I'll show you how now. So what we can do is essentially tell Causal that, hey, we have these 3 products and we want to break down some of our assumptions depending on which product we're talking about. And so what we can do is we can create what's called a category in Causal. It's basically a list of things. And so maybe we have our product A, product B, C. So we have 3 different products. What we can now do is apply this product list to some of the different assumptions in our model. And so our revenue is probably going to be different across 3 products. And so I can apply this product category to revenue per customer. And now I can define a different revenue number for each of the products. So maybe we have a cheap product, a kind of middle product, and then a more expensive one. So we have these 3 different price points. We'll probably also have different numbers of customers for these products. And so we can break down our initial customers by these products as well. We'll probably have more customers on the cheap one, less on the middle one, and even less on the most expensive product. And so we have with these assumptions broken down by the different products. Now, you'll notice that a few other things have changed in the spreadsheet. We can now expand out any of these other calculations and see the breakdown of the different products. We haven't had to change the formulas. We haven't had to duplicate anything. Causal understands that this calculation now needs to be done across all the 3 products separately. Causal will use the product A price point and the product A customers to calculate the revenue for product A. Everything is kind of linked together in that way. And so we've kind of added this extra level of detail to our model where we can now see the different products. If we go into our dashboard, we can now customize these outputs to account for this. And so maybe we want to see a stacked bar chart showing all of the products and how much they're contributing to our customers. Maybe in this case, we want to be able to filter for the different products in this kind of drop down, so we can see the revenue just for product B or just for product A or for all of them together. And in this table, we might be interested in having a separate row for each product. We might want to see kind of totals for each of these things. And so, when it comes to visualizing data, Causal's really a lot like a BI tool rather than a spreadsheet, where we have this kind of structure that lets you very easily decide how to slice and dice different things, how to filter different things. And so now, whoever's viewing this dashboard can see all of those extra product breakdowns and drill down into things. And obviously for the assumptions, they can go into an individual product and change the numbers if they want. So we started off with a really simple model. We just added this level of detail to have different products. What we will do next is try and connect to some historical data to see how Causal can pull in historicals and let you forecast off of the back of that. And so I've got a Google Sheet here. We can connect directly into various different systems, but we'll just use Google Sheets for now. And suppose we have historical numbers for our revenue and we want to pull those in. We can generate that in here. So we will have, I guess, product A, product B, product C. We'll have revenue across these three products. And suppose we have data from January 2023 to October or something. Cool. October, and we'll just generate some random numbers here. I'm not very good at spreadsheet shortcuts, ironically, so I'm doing a lot of clicking around. I'm sure you guys would know how to do this without having to touch the mouse. So we have revenue numbers for our three products over time. And now what I can do is I can connect this up to Causal. So I can add a new data source. We have lots of different things we can connect to, but in this case, it'll just be Google Sheets. I've already authenticated my Google account. And so I can see this example data. I can select the right tab. And it looks like that is coming through just fine. I just need to take this extra step of basically mapping this list of products in the Google Sheet to the list of products that we've already created in Causal. So we're kind of doing that mapping here. And now we should see Causal understanding that we're pulling in revenue across the three different products from the Google Sheet. So this is kind of a preview of the Google Sheet. So we've now connected this up to Causal. The final thing we need to do is basically tell Causal which of our variables is actually related to this data from the Google Sheet. And so we can hover over our revenue variable, click on this data button, and here we can check this box to basically tell Causal, hey, this is the historical data for revenue. You'll see a little data icon here. You'll see a little data icon in a bunch of these cells. That's where Causal has pulled in the historical value and to kind of override what's being shown. And for anything that doesn't have historical data, Causal will automatically use whatever formula we've defined to perform this forecast. And so we have historicals until October. You'll see it says here as well for our revenue, and anything going forwards is a forecast based on the formula. And now, obviously, if we look at our dashboard, numbers are a bit silly, but you'll see that the revenue is this kind of solid line until October, and then it's kind of this dashed line going forwards, which is the forecast piece. So this is kind of a very simple overview of a bunch of the different pieces of functionality in Causal. Maybe final one to show before we move on to headcount modeling actually is the scenarios feature. And so typically the purpose of a financial model or a financial plan is to help you make decisions about your business. And the way we often kind of think about things is by trying to analyze, hey, what would happen if I did X, or what would happen if I did Y? These kinds of things, it might be something like, hey, how many people can we afford to hire if we want our runway to be at least 18 months or something? So you might want to see like, hey, what happens if we hire like 3 extra people? What happens if we can increase our growth by a certain amount? What happens if we can change our pricing? And so there's lots of different scenarios you might be interested in running to kind of simulate how your business might unfold in the future. We have this nice scenarios feature to do just that. And so if we add a new scenario, maybe this is our higher growth scenario. maybe in this scenario, we're going to assume that we grow by, say, 20% per month. So what I've done is I've created this scenario. Within this scenario, I've changed the growth rate. You'll see it's highlighted in blue, so you can see what's changed. And what we can now do is view this scenario side by side. All these other calculations have also changed in this scenario. What we can now do is go into our charts and tables and see this scenario alongside the other ones. And so if we wanted to see both scenarios together on this revenue chart, we'd be able to just go here and say, hey, I want to see the default scenario and I want to see the higher growth scenario. And so you'll kind of see both those scenarios side by side. Obviously, in the higher growth scenario, it kind of gets much bigger. Similarly, in tables, if I wanted to see different columns for each scenario, in a couple of clicks, I can add the different scenarios here. And again, I'll just see the default one and the higher growth scenario for now. And so, now we'll see one column for the default and one column for higher growth. And obviously, you can have as many scenarios as you want. You can decide exactly which ones you want to see and where you want to see them. And so, again, this kind of just reduces the amount of duplication that you'd otherwise have in a spreadsheet. There's a couple of ways you can try and do scenarios in spreadsheets, but it typically involves a bunch of duplication and spending a lot of time just kind of messing around and setting up the plumbing rather than just sort of focusing most of the time on actually analyzing the numbers and thinking about, hey, how reasonable are these assumptions and that kind of stuff. So this is kind of still an extreme basic model. We've done a few calculations, but hopefully gives a flavor of the kind of thing that you can produce relatively easily in Causal. I think we've probably spent maybe 15 to 20 minutes on this. So that's kind of the revenue piece. I'll maybe pause there for a second and see if there are any questions so far. I'll also have a few sips of water, and then we can move on to the headcount model.
If you do have any questions, feel free to raise your hand using the Zoom functionality, unmute and just ask your question, or just pop them in the chat. So it looks like in the chat we have a couple questions. If you want to come off mute, you can actually just voice over or pop them in there in the chat.
Cool. Yeah. So we've got a question from Farhood, which is regarding the growth rate. Do you suggest limiting it so it doesn't grow indefinitely? Yes. So yeah, in terms of actually building these models, what we've done here, this is kind of like a sort of toy example, but it's probably not the way you should be building this kind of model. Because I guess the purpose of a model is to tell you what you should do in your business. And if we're assuming some kind of growth rate, it doesn't really tell us what, we can pluck whatever growth rate we want and we can see a chart and we can say, wow, look how much revenue we'll have, or whatever it might be, but it doesn't really tell us, okay, how are we going to get to that growth rate? And so we typically recommend against having these really top-down models where you're just assuming some growth rates about your revenue or whatever. I would build a model like this much more bottom up, based on the actual kind of reality of your business. And so, for example, if you are, if you're an early stage company and you have kind of a sales-led motion, then you'll probably have assumptions around, how many outbound messages are we sending out per week or per month? What's our conversion rate from sending an outbound email to getting the initial meeting booked? What's then the conversion rate from the initial meeting to kind of the demo or whatever it might be, or the initial meeting to actually getting them on board as a customer? And then if you have this model, you can see, okay, if we want to grow by 20% a month or 15% a month, you can see things like, oh, wow, we actually need to send out like 2,000 cold emails per week. And this is something that's actionable, and you might conclude, okay, that sounds pretty good. We know what to do there. Or you might think, okay, actually 2,000 cold emails per week isn't really realistic. We need to figure something else out if we want to hit those revenue numbers. And so we recommend against having these really top-down models. VCs and stuff also don't really like these top-down models because it's, anyone can just come up with a number here. So yeah, those are some thoughts on things like growth rates. In terms of seasonality and stuff like that, you can model that in. Craig asked, can you overlay scenarios, e.g. one for growth rate, one for profitability? Let's see, a combination of both at once. We don't have any, that's a good question. We don't have any kind of direct functionality to combine scenarios in that way. But you know, we can just kind of create separate scenarios for each one. So we might have this profitability scenario in which we have higher profit margin, and then you know we can kind of create a third scenario, this, where we will have both of those things. And so you know it's relatively easy to just spin up scenarios, and then you can kind of do whatever you need there. Cool. Sweet. In the interest of time, I think we'll move on to the headcount model. But yeah, keep the questions coming on the chat. Someone might be able to answer some of them if they're in terms of like causal functionality and stuff like that as we go along. So this is kind of a really basic example of a revenue model. As I mentioned, I wouldn't actually recommend building a model in this way where you have these like super high level assumptions. Let's now move on to headcount model. And so, as I mentioned before, if you were actually using Causal, I'd recommend using our headcount wizard, where we can connect directly to your HR system and we'll spit out kind of a really nice headcount model based on your data, all that stuff coming in. But just to show you guys how it works, we're going to do this from scratch. And so I will create a blank model. Basically, the purpose of this model is to tell us, hey, how much are we spending on salaries and stuff at the moment and in the past? And then based on the people that we're planning to hire over the next, say, 12 months, how much are we going to be spending on salaries across different departments and different people? So what I've got here in this Google Sheet is basically our headcount data. So we have like a bunch of employees, they have different titles, different departments, different locations, different start dates. Some of them have end dates if we know they're going to leave or have already left. And we have their annual salary as well. So what we're going to do is we're going to pull this into Causal, and I'm going to kind of walk through how you can use Causal to do calculations on this kind of whole list of things in a relatively easy way without having to duplicate too much stuff. So let's first connect that Google Sheet to Causal. And so in the same way as before, we can select that relatively easily. And this should now come in for us. As before, we just need to kind of map these different, these different lists into Causal so the Causal understands that structure. We haven't created, in the previous example, we created the product category before we connected the data source. In this case, we haven't actually created these categories yet, but we can do that on the fly. And so we can tell Causal to create a department category, that, and create an employee category, and the same for location, and the same for title. So now Causal is pulling this stuff in. You'll see it broken down for each employee. And now we can get started on building our model. So the first thing we want to do is basically pull in these data points into the model. So start date, end date, and annual salary. And so instead of us having to manually go into the spreadsheet, type out a name, like connect it up and so on, we can also just create it directly from here. So we can just click on this new variable button, we'll call it start date. And now Causal has automatically created this, and we want to format it as a date. So now we have the start dates of all of the different employees. We'll do the same with end date. So we'll create a variable for date. Move that into the inputs and format that as a date as well. And we will do the same for annual salary. So now we have a few of these variables. This will be in dollars. Sweet. So you'll see we don't have end dates for most of these people, and that's totally fine. So for each of our employees, we know when they start, when they end, and what their annual salary is. Based on these things, we now want to calculate a few different metrics. I guess we're interested in, hey, how many active employees do we have at any point in time? How much are we paying those people? And maybe we want to add on some, taxes or overheads. Because actually, obviously, it costs a lot more than just the salary to employ someone. Probably costs between like 15 and 40% on top of the on top of the salary, depending on what country you're in. So let's start doing some calculations. So maybe the first one we're interested in is the actual just headcount number of people that we have active. And this is where we can start to have some more interesting formulas than I showed in the previous example. And so I guess what we want to do for headcount is we basically want to say, hey, if the current date is after the start date and before the end date of the employee, then they are active. Otherwise, they are not active. And so in Causal, you can write a formula like this. You can say if the date is greater than or equal to the start date, and the date is less than or equal to the end date, then they're active. So we'll give them a 1. Otherwise, they're not active, and we will give them 0. So we can write this formula. I think most of these people probably started in 2022, so we'll maybe start our model a little bit sooner. Cool. So now we should kind of see that depending on the employee, there's going to be a bunch of zeros and a bunch of 1s based on their start and end dates. And I think what we probably also want to account for is the fact that a lot of these end dates are blank. And so we can say, cool. So we basically accounted for the fact that some of the dates might be blank. And so now we can see all of the different employees when they're active, and Causal will automatically roll that up into this total headcount number. And so now we can say, okay, in January 2021, we have 23. This kind of goes up to like, 70 or something, 64 by the end of the model. If we wanted to see different roll-ups, we can do that. So maybe we want to see like at the end of each quarter, how many employees do we have? Causal can automatically create those columns. There's just one extra thing that we have to do here. Obviously, if we have 25 employees in March, that doesn't mean that we had 25 plus 25 plus 23 across the quarter. We actually just want to take the final month's value to get the quarter's value. And so you can tell Causal how it should roll up those months into quarters. And for something like headcount, which is kind of a cumulative metric, you want to take the final month's value rather than sum up all the different months. And so now actually you'll see that this is accurate. So we've got our headcount. I guess we will have like salaries. And basically we want to take the annual salary, divide it by 12, and we want to multiply this by the headcount essentially. So if this will be a 1 if the employee is active, it'll be a 0 otherwise. And so now with that single formula, we can see like how much we're paying each person in each month based on whether or not they're active. And it's all automatically getting rolled up into this total here as well. And suppose we want to work out like, let's say like employment overheads, maybe this is like 20%. We can work out our overheads pretty easily by just taking the salaries and multiplying it by the overheads. And then I guess we'll probably have like total payroll costs, which is just our salaries plus our overheads. And so once again, we've got like 3 or 4 formulas in here. These are generating all the calculations across like 64 employees across 24 months. So actually in this case, it's a lot more. And across these 4 different variables. And so the amount of complexity in Causal is very little. You can kind of see exactly what's going on here. But what's being produced behind the scenes is quite a lot and would require a lot of duplication in spreadsheets. So we've got a bunch of these calculations now. And there might be kind of extra levels of detail you might want to add. Tarun has asked a question: how can you change the model between 26 pay periods versus 24 pay periods? Do you mind elaborating on how exactly you guys think about pay periods there? Like, do you sort of have a sort of custom calendar set up, or is it kind of, just every 2 weeks rather than on a calendar basis that you guys are paying out? I imagine it's probably just every 2 weeks rather than on a calendar basis. And so what you'd be able to do is actually have a weekly model in Causal. So you'd basically tell Causal, hey, this is a weekly model. And then, I guess based on the start date of someone, that, hey, we're only going to be paying them every other week. And so then in your formula, you can say, hey, basically every other week for this person, we're going to be paying out the salary. And, for the weeks in between that, we're not going to be paying that out. And so, to do that, we probably have just a weekly model, and then the formula should be pretty straightforward. That was a good question. So we've got a bunch of these calculations at the employee level. Just to kind of continue building this out, you might want to see some of these calculations at a department level. This is where in spreadsheets you'd have to do a bunch of sum ifs, count ifs, index match, VLOOKUP, all this kind of stuff to basically aggregate these employees up into their departments. In Causal, we make that pretty easy. So if we want to see our headcount by department, we've already done the headcount calculation, so we can just reference that. And if we click on this little button, we can see all the different ways in which we could group this. And so right now it's by employee. If we want to group it by location, we can do that, department title. In this case, we'll just group this by department. And so in a couple of clicks, we now have all of those employees rolling up into the different departments here in this variable. And so we can see how many people we have in each department. And we might want to do the same for total payroll costs by department. And so we'll just reference our existing calculation. Again, we can just group it by any of these different categories that we've created. Now we have that rolled up by the departments. Once we have, whatever calculations we're interested in, we can now start to visualize this. Maybe a couple of bar charts are interesting. Maybe we wanted some kind of some tables and stuff like that. We can go to the dashboard here. See a list of all the employees and their totals. I think this. And so you kind of create this table and see the full list of employees, and even add new items here if they're if you want to make some planned hires in the future and so on. And so you can kind of visualize this stuff however you want. Maybe just create a table at the bottom as well with all the different departments in there. So this took maybe like another 10 minutes, maybe 15 minutes max. But we now have this nice model where we have all of our employees coming in. If we wanted to add planned hires, we could add them to the bottom of this list and add start dates and salaries and so on for them. And all of our calculations would update automatically. And then, once we're happy with this model, what we can do is then reference the outputs of this model in our other models. And so we probably have a P&L model. Let's just pretend that this revenue model is actually our sort of broader P&L model. We can link it to the headcount model. And then here, what we can do is we can essentially, if we wanted to bring in our payroll numbers, we can reference variables from the headcount model. So we can say, hey, I want to see the total payroll cost. And so now these numbers are coming directly from that other model. And what this means is that you can actually have different permissions for each of these different models. So you probably don't want everyone in a company being able to access that headcount model with the sensitive data. But you might want more people to be able to access this kind of high level thing where they can see the total payroll cost, but not individual salaries. And so this is how you can do something like that. So this kind of headcount model, just want to be mindful of time. Maybe just to wrap things up, I can sort of show what a sort of more fleshed out model might look like in Causal. This is just kind of an example. You might have a bunch of different departments set up where you can drill into individual departments and how much they're spending. These numbers would probably be coming from QuickBooks or Xero. You probably want to sort of save a budget version of your model at the start of the year. And then as the months go by, you want to compare what the actual results were against that budget and what the difference was, and try and understand why there was that difference. And you'd have a bunch of different models built out for the different financial statements, revenue, headcount, etc. And so this is what a more fleshed out setup might look like. But the sky is really the limit. We have even public companies using Causal for all their planning and modeling and forecasting. And so There's not really anything that you can't do in Causal. And so we can kind of scale with you as you grow. We probably start off super simple, just wanting to see your runway based on some high level kind of assumptions. And then as your company grows, as you get sort of a more complex org, as your business model kind of evolves and starts to scale up, you can add all that extra complexity in as things go on. So I will stop there. We've got sort of 10, 15 minutes remaining. And so happy to just kind of open the floor to questions related to Causal or financial modeling in general, or just kind of finance stuff at startups. Yeah, whatever's interesting.
Hi, this is Tarun.
Hey, Tarun, how you doing?
Hey, good. Do you have any inbuilt canned KPIs for SaaS business model?
Yeah, so we've got a bunch of some SaaS templates basically, where you can I can share my screen and show you what that looks like. But essentially on our website, you can browse a bunch of our public templates. And yeah, we'll have some SaaS ones in here for sure. So if it's like a sales-driven SaaS company, we have a template for that. If it's more of a marketing-driven SaaS company, we have a different template for that. And so, yeah, this is the kind of template that's sales-driven, where you'll have a bunch of different account executives. They'll have different annual quotas. And then we're calculating all of the sort of typical metrics you'd expect from a SaaS business, like churn and new ARR and all of that kind of stuff. And you can also fill in assumptions around that.
Okay, thank you.
Cool. Well, look, if there's no more questions, that's totally fine as well. As I mentioned, Causal's kind of a finance tool for early and growth stage companies, and so if you guys are currently using spreadsheets, Excel or Google Sheets for this kind of stuff, would love for you to consider Causal. You can just go on a website, sign up for an account for free, and get started. It's like a 2-week trial. And then if you like it, then you can kind of upgrade down the line. Shirley has asked, what would be the key advantage of using Causal versus Excel plus Power BI or Tableau? We're building models on Excel and have templates that we can easily reuse and customize when needed. So I'm trying to understand the key value proposition of Causal. I'm not from the finance team, but I've seen beautiful models or dashboards created by my colleagues. Yeah, that's a great question. I think the sort of the value of Causal is we see sort of threefold. The first is just in kind of raw time savings of automating the data connection. So your finance team, Shirley, is probably spending probably like somewhere between 5 and 15 hours per month exporting data from the accounting system and maybe data warehouse and stuff like that, pulling it into the spreadsheet, updating the sort of actual columns for things, calculating those variances and so on. And so just by us having those live data integrations, we save finance teams often like 1 or 2 days per month, sometimes more. That's kind of the most tangible part of the value. There's also a bunch of time savings in terms of actually building and maintaining these models. Most of our customers find that it's probably about 4 or 5 times quicker to build stuff in Causal compared to spreadsheets in terms of running new scenarios, in terms of kind of updating your model as things change, creating new charts and tables as people request them. And then finally, just kind of being able to share this stuff in a kind of live and sort of dynamic way with the rest of the company, kind of makes people engage a lot more with the financial model. I think what finance teams historically have kind of gotten stuck doing is they kind of create this spreadsheet, which a lot of the rest of the business doesn't necessarily understand, and so they're kind of detached from the rest of the business. And so having these nice dashboards can really help with that. Obviously, Excel's a great tool. You can do pretty much anything in Excel as well. It's just a matter of how much time you're having to spend maintaining the thing, making updates to the thing, error checking formulas, and so on. But we really, I think our most successful customers are kind of using Causal sort of as the kind of single tool for all of the numbers and data. So they're kind of using us as a BI tool So kind of replacing a Tableau as well as a kind of financial modeling tool, replacing the Excel piece, and just having everything in one system makes it much easier for you to kind of reference other people's work and kind of build on things as you go along. Craig has asked, any live examples or best practices for location-based models at retail / brick and mortar? Yeah, in terms of best practices for that, a lot of our customers are location-based businesses. There's a company called Forward Health, for example, which I think some healthcare provider in the US. They have different locations in a bunch of different cities. I think this is where the categories functionality in Causal can really help, because otherwise, every time you're thinking about spinning up a new location, you have to then duplicate a bunch of stuff in your spreadsheet. Maybe make a new tab, maybe you just add a bunch of rows. And so having that within Causal structure where you can have this location category can really reduce the amount of duplication you need and make it much easier for you to actually build and maintain that model. Obviously, the model itself would depend on what kind of a business it is, and you can kind of check out some of the templates that we have on the website.